Hello and welcome everybody to the 2021 SMSF Service Providers Awards brought to you by Self-Managed Super and CoreData. We really wish we had been able to present these awards in person tonight, but unfortunately, as most of us are in lockdown, we have to do this via the virtual platform. But we do hope that the awards night in 2022 we'll see a return to a face-to-face function. Now, before we get started, I'd like to give a big thank you to Trobe Fnancial for supporting this event as our commercial partner. Trobe has actually been with us almost every year since the inception of this event in 2013, and their support is invaluable as without that sort of help, we can't put these events on. So thank you to Trobe. A very quick rundown of how this evening will play out. First of all, Trobe is going to make a very short presentation to the audience. Following that, Andrew Inwood from CoreData is going to make another presentation just about the state of play in the SMSF sector at the moment. And after Andrew has finished his presentation, we will start to present the awards. So without much further ado, let me hand over to Lillian Chin, who is the Director of Client Partnerships at Trobe Fnancial. She is the latest addition to the Trobe Fnancial executive team, having joined in April 2021. She has over 21 years of experience in the domestic and international private banking industry, and most recently was a regional executive in Westpac Group's private wealth division. Welcome, Lillian.
Good afternoon, everyone, and welcome to this year's SMSF Service Provider Awards. Trobe Fnancial is proud to be a major sponsor of the SMSF Service Provider Awards. We now have been involved for almost a decade, nearly as long as the awards themselves have been running. For us, it is important to support these awards as they recognize the best of the best in the industry, including best in practice and best in class. With the judging undertaken by advisors and trustees, these awards are truly democratic and representative of the market's voice. This is a simple but critical difference from other awards. Trobe Fnancial has been committed to supporting this sector. As responsible stewards of our investors' capital, we have a strong and experienced team working tirelessly to ensure we continue to meet our customers' expectations. In what has been a challenging 18 months for everyone, it is more important than ever to be there for our customers. Trobe Fnancial has a long history of supporting the advisor, trustee, and SMSF market in Australia, and are delighted to be given the opportunity to again partner with Benchmark Media and CoreData, both who have done an excellent job in delivering these awards. We are also humbled to be nominated as a finalist in a number of categories today. I would like to take this opportunity to congratulate all the finalists. You all deserve recognition for your efforts. For now, thank you and good luck.
Thank you very much for those words, Lillian. We're now going to hand over to Andrew Inwood, who's going to give us a quick snapshot of where the SMSF sector is right now. Welcome, Andrew.
Thanks, Darren. And I want to make this as straightforward as possible, given the time constraints. In a normal year, we'd be taking the time to hear from the winners in each of the segments, but this year is very different, as you know. We're all locked down in our various places and doing the best we can to stay in touch with the market and do what we're doing. So I'm going to quickly talk about some of the data which is coming out of this research, and then flip very quickly to talk about the winners in each of the segments and very briefly why they've done. So no one will be speaking this year apart from me, and I'll be handing back to Darren. and to Trobe, sorry. And thank you very much for making the time to listen to us and talk about what we've got to talk about what we're doing in this space. So if you don't know much about CoreData, we've been in business since the year 2000, which is just about the same time that the SMSF launched. As you probably know, they launched in 1999 after being introduced in 1991. I remember both of those incidences. That's how long I've been thinking about SMSFs and their place in the market. And we've been working hard on understanding financial services and markets around the world. We have offices in Sydney, Western Australia, the Philippines, London, of course, Boston, not to mention Malta and Barcelona. So we get a very good picture of what's happening around the world, and we focus only on retirement and in financial services. So we've got a very narrow but very deep view of the world. But if we look at the sort of sample that we got this year, so there's 585 people who run SMSFs or sell SMSFs who've responded to this, which gives us a meaningful understanding of the marketplace. We could kind of plus or minus 3% on that data. A lot of accountants, as you would expect, because it's accountants that are actually directing in the main the flows in SMSFs and understanding what's going on in those spaces. Very big sample of trustees and non-trustee members of SMSF. So you get a good understanding of how they're feeling, what they're doing. And that's really important to understand. It's really important to understand the advice or accountancy lens, and it's also really important to understand the trustee lens in the data. And as the young woman from La Trobe said, this is a voting sample. There's no fudging of the information. It's frequency and satisfaction which are driving these numbers, and more than happy to share that with you if you have some desire for further information. I want to quickly start and look at the state of the sector. It's really important to understand that industry funds overtook SMSFs in size in 2019, September 2019, and they're continuing to accelerate away. While they're tracking in the same way simply because that's the way the economy is tracking, the gap between the two is starting to increase, which is showing how some of the effects of the changes in legislation and the flows of money are starting to move inside the business. And you can see that the industry funds have been the net beneficiary of the demise or decline in retail funds. That hasn't really flowed to the SMSF sector. So that's going to continue for some time. And as we move into the third wave of superannuation in Australia, how the SMSF sector competes is going to be very interesting, and how cost and how acquisition of targets move will also be quite interesting. Establishments have been relatively steady in terms of the total number of SMSFs. So it hasn't been declining incredibly rapidly. As you could see, it happened in in 2020 when the net numbers were going down. It was bobbling along pretty flat for a while after the taxation bonus that came in 2016, flattened out for a while, and it started to rise again as we get a lump of people nearing retirement. So that's going quite well. But wind-ups have continued to drop. As fund performance rises, wind-ups are dropping. That may change in the future, and simply because of the way the age curve works in Australia. If you want to pull apart the demographics, I'm happy to more than happy to share that with you. One of the things that you should be really conscious of is the youngest baby boomer in Australia, that big pig in the python of Australian demographics, turns 57 this year, and the flex towards retirement has started to rise. One of the things that our retirement data shows us very clearly is that most people don't retire by choice. They're retiring through ill health or some other fundamental change in what's going on. So that's going to push what happens in the shape of this sector quite fundamentally and quite differently. The really interesting number in this isn't so much the wind-ups, but it's the median fund performance. It's taken off again. As the market's risen, then the fund performance has really taken off, which is leading to a great year in terms of expectations and outcomes. Getting to that point, we are outperforming expectations, and you can see here that a quarter of the people who responded to the survey essentially said that my fund has performed well above my expectations, which is 10% more than we get on average. Usually we get about 13 to 14% on a linear basis saying that. It's twice what it normally is. And we've got about a 10% jump in the number of people saying it's performed a little bit above my expectations. That expectations question is something that we have to look at as an inferential question, because everyone's expectations are different. It's really important to understand that what you're picking up there is this kind of zeitgeist that people thinking this sector is doing well, and that's very important. Trustees think that they're doing very well. They think that they're doing much better or somewhat better. A third of them essentially doing much better or somewhat better than everybody else in the market. The numbers don't really show that. If you drill into the sector on sector performance, that for most people, they're doing about the median, but the expectation that people are performing better is very strong this year. So a third of them think that they're doing significantly better than everybody else. The reality is more close to the average, as you would imagine, but this feeling pertains. That's not really why people are joining SMSFs. The very big drivers continue to be the idea of greater control and financial flexibility. And you should really be putting those two numbers together because they're essentially the same thing. It's control and flexibility are obverse signs to the one coin. And so understanding that about 45% to 46% of the people are doing this to actually exercise control and to gain the flexibility over their investments. The interesting number in that is the decline in the number of people who are seeking to outperform taxation legislation. Those things are sort of really going away. And the other part of that's really reducing is the ability to invest in direct assets. Look to see what happens in the future with that, particularly around that second and third investment property. While property is running hot and they do expect it to outperform in the future, that direct investment part is coming out of it, and that's important to understand. People's costs of administering for non-investment advice in SMSF dollars is going up. Not hugely, to be perfectly honest. It's up a tiny amount year on year, and it's continuing to trend up. So people can see that's what's going on. My sense is this is a reshaping of the way in which people are charging for services, and I expect that to continue to go up as people value the fees that they're charging for non-investment advice. And the investment advice piece on the other side is going down. So, and you can see that's actually relatively significant. They've effectively not halved, but they've gone down about 70% in the past 2 years, and that trend will continue. My expectation is that that's going to get closer and closer to 1 or 2%, as it has internationally over the next little while, and we're going to see those other fees go up to compensate, and also because they are actually a big part of the person's value. This part of the cost is coming down and remaining relatively flat. If we start to look ahead and ask people what they think is going to happen, both advisors and consumers, trustees in the system think that the economy is going to grow much more quickly in the next 12 months. There is still real optimism in the Australian economy. I make no comment on whether they should be optimistic or not. That's the role of soothsaying. I'll leave to people with much better insights to the economy than me. But given this is the large amount of money, and given this is the way that the money is flowing, there's a kind of self-fulfilling part of this, which is that if the money is continuing to flow, people are continuing to push into the market, then the market will continue to speed up. And so those things are likely to happen. So if you're in the SMSF business and you're expecting increased investment and you're betting for that, then that's absolutely going to happen, and that's important. They're also optimistic for the sector. They think the sector will grow in the next 12 months. Essentially, 1/3 of people think that this is going to grow and grow quite strongly in the next 12 months, and then the remaining 70% think that it's not going to do much. So the big movers in that this year are the number of people who think it's going to grow, speed up, and that's up 7%. The number of people who think it's not going to, no change, is up 8%, and the rest obviously are down. So the shift to speeding up is true of everything. The people who are responding for this on this that think that the number of people who are opening an SMSF is going to increase in the next 12 months. The clarity around this is pretty strong. It is effectively about 50-50, where half the people think that there's going to be no change, but half the people, and that's up from slightly up on the previous year, show that they still have confidence in that. So they're reflecting the needs of other people coming into that space. There is also extraordinary confidence in the domestic economy across every factor. They think residential property will speed up significantly, Australian equities will speed up significantly, international equities perform less well than Australian equities. Where they get that data from, I have no idea. And that cash will also continue to do well. And you can see how strong each of these are. If you look at this on a straight year-on-year comparison, side by side with advisor and and trustee, you can see that people are really believing in every segment of the economy. So residential property has gone up very strongly across the board, and then mirrored down by equities, both locally and internationally. And interestingly, 1 in 5 people think the same is true of cash. The growth is going to change, though. The net number of new people coming into the market, people think that that's going to diminish. And that looks like they're right. It looks like the growth is actually going to come from poaching, which is dissatisfied customers moving from one space to, trustees moving from one supplier to another supplier. So while the net new number is likely to be decreasing, the churn factors are likely to be up. And that's quite interesting. And when you think about what's going on. Referrals are falling in importance. Obviously, people are getting net new clients, but they're still the dominant place that people are going to get new clients from. And that's pretty obvious. What is interesting in this is, and if you look at it, it's the second one from the bottom, is the referrals from external accountants is essentially halved. Everything else has remained much the same, apart from client referrals. So that externals from external accountants is halving. And that's potentially reflecting this churn driver, and potentially reflecting the fact that this market is maturing in a lot of ways. So that means that people are more actively targeting new types of SMS clients. They're actually going out and doing it themselves. And you can see it's gone from about 1/3 of people actively targeting to about half the market actively targeting net new clients, which means the push for growth is on, and the push for growth isn't necessarily from bringing people across into SMSF, but asking them to come to them and take a new service. The people are coming from the same places. If you think about this, and we break the world up into what are called post-Jungian segments, which is coach seekers, people who are looking for someone to help them do everything, controllers, people who want to control every aspect of their life and use an SMSF as part of the way in which they exert control on their life. Outsourcers, people who just want to give the whole job to somebody else. And then the final Jungian segment is worriers, people who just worry about everything and don't do anything. They tend not to have SMSFs, to be honest. If they do have them, they've inherited them. The dominant characteristics are controllers and coach seekers, and they still remain dominant. That means that the behavioral push for this across the big part of the market, because coach seekers and controllers do tend to be wealthier, but they aren't the biggest part of the market. They're behaviorally designed for it. The biggest part of the market are the outsourced and worriers. There's a larger number of them, and there's larger pools of assets, but they find SMSFs quite constraining to actually get to. People think that adding another member to the segment would be good. So both the trustees and advisors are actually quite keen on that. Whether or not that goes up through legislation and passes through is yet unknown to us, but we do have a preference for that. Let me get into the awards and do this very quickly. I'm going to be crisp at this. I think being crisp is important because, you know, I'm between you and Thursday evening drinks, and everyone in Australia knows that's a relatively dangerous place to be. So the methodology of this is very straightforward. It's a survey sent to our database and benchmark media's panel of trustees and advisors. It was conducted in June. Trustee sample was 342, as you know, and the advisors / accountants was 585. So we're plus or minus 3% on all these numbers. We're going to break down each of the segments and we're going to go through them, and I'm going to be pretty quick on this. First category is Australian shares. For the service providers, the finalists were AussieX, BT and Macquarie, and the winner was AussieX, and they've done incredibly well. Once again, I mean, everyone knows where AussieX have come from. And they need to make sure that they continue this movement. They've really done a great job of making their transformation, and they've continued their dominance in the marketplace. On the service provider finalist awards, it's CommSec, Dimensional and Fidelity, and the winner is CommSec. Once again, it's their ability to have the great platform and the great interface which is holding them at the front. They're so hard to beat in terms of the usability. It's going to be hard for everybody else to do it. They were a first mover and they're maintaining that ability to be in that space. So well done to CommSec for staying in that space. In international shares, it's obviously a little bit more constrained. New entrant this year is starting to push some other people out. Janus Henderson, it was delightful to see them come into this mix and to see who's going to in the space. And the winner, and if we just go backwards because I'm an idiot, I apologise for that. And the winner was Macquarie. Macquarie had a great year on the international shares portfolio. Not only did they get their conversation right, they got their performance right, and they got their ability to talk to the market right. So they did a very good job of that. On the international shares on the service provider, Franklin Templeton, Interactive Brokers, and Janus Henderson. Again, Janus Henderson coming in. They've had a very good year pushing into the space. So they're really in consideration in both these segments right now. So they're a new name and they should be pleased. But it's Interactive Brokers who are the best in the international space. Again, it was about their ability to communicate, bring the opportunities to market, and move through in that space very quickly. On the fixed income side, tough year for fixed income generally. It's been hard as those parts of the market have been constrained, and competing in the space is always a challenge. The finalists on the Service Provider Awards for the finalists for the advisor choice are AussieX, Franklin Templeton, and Macquarie, and the winner was Macquarie. Macquarie long had a stranglehold in this space and have worked very hard to maintain it. They continue to do well and make it hard for new entrants. They did have a first mover advantage. They were around in 2000 and working in this space hard, and it had been hard to dislodge. On the trustee choice, it's CommSec, Franklin Templeton, and Trobe. On the fixed income side, it's Franklin Templeton. I'm really pleased to say that they got up this year. A great effort from this year to push the others out, and they've done it again through making sure that they've been able to produce high quality product, get it to market well, and make sure people understood what the benefits that they were providing in what has been a pretty tough year. On the administrator side, always something that people undervalue. I think it's an incredibly important part of this part of the world. And I hesitate to say it, particularly with so many asset managers in the room, but this is where a lot of value is actually added to the SMSFs. And it's easy to stuff up and hard to do well. It's something which actually drives a lot of the complaints that we see in the SMSF world. If the administrator makes a mistake, it's something that people notice a lot. On the Service Provider Awards, so on the advisor choice, it was Heffron, Super Concepts, and Super Guardian, all great businesses. The winners this year was Heffron. They squeaked over the line, to be perfectly honest. It's a highly competitive space, but congratulations to those guys. Great business, doing well, and continuing to maintain a leadership in a very, very tight space. We get to the trustee choice, as AMP SMSF Solutions did very well, Keep It Simple Super did very well, and More Superannuation did very well. It pushed out a lot of people, and the winner this year was More Superannuation. I'll have to hand it to More Superannuation. They're obviously not as big as some of their competitors, maybe potentially not as well resourced, although you would argue that. They continue to bring the benefits for the trustees, and they continue to get a very good score every time. This wasn't as tight as the Service Provider Award. This one was, there was some daylight in this data, so congratulations to those guys. On the commercial property side, been a great year for all those involved in commercial property. It's been very good for investors around the place as the yields have done what they've done and the asset values as money has been flooding into the system. You know that there is about 100 billion now of unspent money in the Australian economy as the economy has shuttered itself against COVID, and that's starting to find new homes. So there's not much supply in commercial property, and when people are making decisions, they're doing very well. The finalists this year on the advisor choice side were Charter Hall, Colonial, First State, and Goodman, all great businesses, all very experienced and doing quite well. And the winner this year was Goodman. Goodman were bringing good deals to the market. They were making sure that they drove the yield in a very choppy marketplace. They're well positioned to benefit from what's happened to COVID. The others have had more complex years, but these guys have done a great job in handling that. On the Trustee Choice Award, it was Colonial, First State, Cromwell Property, and Mirvac Group, all again great businesses. And the winner this year was Cromwell Property Group. Again, doing a great job of communicating what they're doing and how they're doing it in what's been a relatively choppy commercial property market, as different sectors have been affected differently and people have been able to get through it and do what they need to do. Residential property loans, very competitive area year on year. The compression in the market this year has meant that new players have started to enter into it. The banking sector, which have traditionally dominated this space, have not doing, the big four, which have traditionally dominated this space, haven't done as well this year, allowing some new entrants in. And there's been quite a lot of research in this field across the board, and the new entrants are doing very well. The people who are in this space at the moment are ING Direct, Trobe Financial, and Liberty Financial. This is on the advisor side, and it was a really interesting thing. Very pleased to see these businesses in, because I know that they've been through a lot, but they've really managed to get themselves together. And the winner this year was Trobe Financial. The combination of good marketing, good processing, and making sure that people understand the benefits they provide through the cost of their loans has been something which has been really impressive. The thing which makes a difference in this space, particularly to the advisors, isn't so much the cost, and let's be candid about this. It's the ability to process the deals effectively and efficiently and meet the advisor where they are, which drives those numbers. So they should be very pleased with that. On this, it's a self-service provider and the trustee choice, new entrants. NAB's been in there forever. Bank of Queensland is new, and Mortgage Easy are new. Very pleased to see them on the radar, particularly as they are pushing into the new marketplace. The winner this year is Bank of Queensland. Again, this isn't just about price, although they are very sharp on price. It's about their ability to compete in this space. They've done a great job. New management at Bank of Queensland, they've taken a lot of new people on. A couple of years ago, they took a couple of people out of our mortgage team, which is slightly annoying, but that's good for them. And they've managed to get their act together and really focus on the processing part of what they're doing, and they've done a great job, and much deserved win to them. I couldn't be more pleased for them. Investment platform, this is a tough space. For those of you who are running investment platforms who are here, you know how hungry they are for capital, you know the difference that they make, and you know the challenge there is to keep these things ticking along and managing people's businesses and operations very well. It's a great place for the value being added in SMSFs. Getting the right investment platform and the right partner in this space is really important. It bears no saying, but if you can look around the world and see the role of investment platforms are playing in the growth of the sector internationally, the same is true here. So I have nothing but respect for the people who are providing the services. I know the heavy lifting that they're doing. And the finalists on the advisor side were BT Panorama, Hub24 and Macquarie Wrap. Frankly, these businesses are very close in performance. There's not much separation in terms of who's doing what. The winner this year was Macquarie Wrap. They've had a very good go at actually staying close to the market and communicating well with advisors. Some of the competitors have been through quite a lot of change. Hub24, as you know, has changed its structure and what's going on. BT Panorama has been through those similar sorts of changes, and there's a little bit of lack of clarity about where they're going and what's going on. Despite that, I think they're doing a very good job. Macquarie Wrap has been sticking very closely to its knitting and delivering well, so it's delivered well and won the award. On the trustee choice, then there's no real separation. Again, it's BT Panorama, Hub24 and Macquarie Wrap. And the winner again is Macquarie Wrap for very much the same reasons. They're sticking to the knitting, they're staying the communications, they're not being distracted. While I think the growth that's going to be delivered for both Hub and BT Panorama as they go through the next changes is going to be really good. Macquarie have done a great job of investing in their business and driving that forward. Cash and term deposits. Look, this is a very homogenous part of the world. It's hard to be better than everybody else, partly because of the way the segment is set up, partly because of the way what's going on, and partly because of the cost of just being in this market space. It is very heavy in cost, and systems play a very important part. The big three players are CBA, Macquarie and National Australia Bank on the SMSF Service Provider Awards, and particularly the advisor choice, should I say. And again, there wasn't much between them this year, and the winner was once again Macquarie. They've long been dominant in this space. They've got the first mover advantage. They continue to do well. It's too easy to say that they've just got first mover advantage. They're absolutely keeping their prices sharp and their service sharp as well, and doing a great job. On the trustee choice, the story is very different. It's Bank of Queensland, CBA and Suncorp. I think having Suncorp in here is very exciting. They've done it incredibly well. The new management there has meant that there is a much better focus on the terms and types of products they're doing. And I'm kind of thrilled to say again that Bank of Queensland's got up and done it and delivered in this space. So if you look at these guys from not really being represented in the space as much as 12 to 24 months ago to being award winners in two spaces that are aligned in this space, the team there has delivered very well and made things move forward. Insurance has had a couple of tough years, and because of the way in which the regulations moved, because of the way in which the markets moved, because of the way in which some of the cost structures have moved. So, but it's an absolutely critical space in this. Doing a lot of research into this at the moment, particularly in the self-managed super fund area. This is a complex part of the market to have insurance in. The types of insurance you need, the way you sell, who has the relationship is very complicated. Doing well in this space is hard. From the advisor side, it's Asteron, OnePath and TEL who are the finalists, and TEL are the winners. The bit that's made the difference from TEL, and it's very clear in the data, it's on the customer service side. It's about managing the claims and managing the relationships and making sure that people are confident all the way through the relationship. That's throwing no shade on the other finalists. They're absolutely great. It was a small margin, but TEL managed to get up. We look in the trustee choice, it's AMP, Noble Oak and OnePath. Some traditional players there with AMP and OnePath, but the winner was OnePath. And again, it's down to the ability to get the deal done and to get the process in. Again, very tight. In the market where these markets are becoming more homogenous, the results are very tight. So understanding that becomes very important. This is a really interesting one. This is the people who are providing the actuarial certification provider. So obviously the response group to this is relatively narrow compared to everybody else. The finalists here, and obviously it's only one group who are responding to this, are Curium, Act2 and Heffron, and the winner was Accurium. So congratulations to them. Again, relatively tight field, but they've done enough to deliver on that space. On the software side, this is a part of the market which is continuing to grow and flex, and particularly a very important part of the marketplace as we move forward. Understanding who's going to be successful here and how this drives satisfaction in the marketplace means that this part of the industry is going to become increasingly important. There are three finalists this year. There are APS, of course, BGL as usual, and Class as usual. And the winner this year was BGL, continuing just to outperform on the service side, just to make sure that people are satisfied and just to be able to get back to people and make that process better. They're starting to deliver for them. As the services themselves start to look a lot more like each other, BGL continues to be able to perform well in that space. The audit function provider, again, critical. SMSF audits can be time consuming, can be difficult. They have yet to really get the attention of the regulator. I think it's a well-run part of the industry by and large. There are obviously exceptions to that. The finalists this year were ASF audits, Evolv audits and SMSF audits, and the winner was ASF audits. Again, making sure that people are well understood, having the processes right and being able to deliver for people really makes a difference in the tight market, really makes a difference when there isn't much between providers. If we look at this from the trustee choice, from the other side, the International Independent Audit Services are in there, National Audits Group are in there, and SMS Audits are in the same place. And the winner was Australian Independent Audit Services in a relatively strong showing in that space. So congratulations to those guys. ETFs are going to be an increasingly important part of the SMSF world. I've been watching them very closely. I've been watching their role, no doubt like everybody else, as this becomes an important part of the market and understanding where the structure is. There's going to be more and different structures creeping into the SMSF market. Have a look around at what some of the people are doing with calling out note for people like Magellan, calling out note for people like Allianz, starting to do interesting things and provide products. The ETF market still stands to be a really important part of the marketplace, and that's going to be important. On the advisor choice side, it was pretty close. BetaShares, iShares and Vanguard. The winner this year was BetaShares. Very strong range of ETFs in the marketplace, some great performances, some good customer services. Everyone's making a kind of bet on which way they're going to go, whether they're going to go for a narrow range or a wide range. BetaShares have clearly made their bet. They're clearly making it work and they're continuing to grow, and that's fantastic. If you look at it on the trustee shares, Russell Investments, iShares and BetaShares are in the space, and the winner is once again BetaShares. They just make it very easy to choose. They've got great service and they've got a wide range, and they're doing a good job, I think, of being the most obvious one in the marketplace and allowing people to make those decisions. On the listed investment company side, you can form your own view about the future of listed investment companies versus ETFs in the marketplace. They're not going to go away quickly. They still have an interesting role, and there's still lots of money in the segment. On the advisor choice side, the BKI Investment Company Limited, Global Masters Fund and Global Value Fund Limited are the finalists, and the winner was Global Value Fund Limited. It's a great win for them in a market which has been going through a lot of turmoil. The ability to continue to promote, do well, and be well rated by advisors is very important. On the trustee choice, it's I always want to say DUI. I promised I wouldn't do that. Diversified Unified Investment Company, Future Generation, and Platinum. All of these are great listed companies, listed investment choice companies, and are doing very well. And the winner was Future Generation Investment Company Limited. Bit of a mouthful of a name, but absolutely a great performer. Trustees are finding it really easy to choose this group, and looking into the data, they outperformed relatively strongly. So it's a great result for them. The trust deed supplier, again, core part of the admin group and core part of what's going on. It's really important to understand that getting this stuff right is important. Getting it wrong is disastrous. It's easy to get right, but it's also easy to get wrong. So I always have a great deal of respect for people who get this through. The people who are in the space are ClearDocs, Now Infinity, and TopDocs. They're the finalists in the advisor choice slide. And the winner this year was ClearDocs, and congratulations to them. They continue to do a great job, great service, great product, and doing it. It's a very competitive space. Every one of the people who are in the space is worth watching, and it's one of those ones that's just who's in the front at the time of doing the survey. So congratulations to them. On the trustee choice, it's BMR Corporate Solutions, Lightyear Docs, and Now Infinity. 3 different providers, and the winner this year was BMR Corporate Solutions, again by a relatively good margin. So while it's a tight place, BMR Corporate Solutions are continuing to do a great job and meet the trustee market and get great numbers and satisfaction. On the infrastructure side, challenging year for infrastructure in some ways, very good in other ways. We have had a lot of movement in the space in Australia. It's Lazard, Macquarie, and Magellan who are the people who are the competitors in this space. And the winner is Macquarie. Not that much of a surprise, given that the deals they've been able to do this year and the conversations they've been having with market and the way in which they've brought the return. So very good result for them. They're sort of dominating a bit in the SMSF space at the moment, and that's important. And on the trustee choice, different group, Colonial First State, Infrastructure Capital Group, and Magellan. And the winner is the Colonial First State guys. Very busy year, some great successes for them, and some great reporting and some great returns. So they've been able to do well and make sure that they've got their message through and around. The innovator choice is a challenging one. This is the space where we actually have to go out and ask a lot of people about who's doing what. There's a couple of ways in which you can think of innovation. There's about product, there's about service, there's about conversations with regulators, making sure that you are bringing new product to market, having better conversations with regulators and getting the comments out there is really important to understand. The results were pretty clear on this, right? And it's important to understand. Domicom are obviously there for their product. The Trobe Financial for both the product, the service, and the way in which they're engaging the marketplace. And Moneyplace, of course, for the way in which they're doing all of those things as well. The winner this year from the advisor choice was La Trobe Financial. It's the 3 things that they're doing well which really set them apart. They were engaging with the regulator, engaging with the product suite, engaging with the way in which they're able to deliver returns, and the way they engage with the marketplace. So there are 3 clear areas of outperformance for them. If we look at it for the trustee choice, it's different. La Trobe aren't even a consideration in that space because I guess they don't deal with them. Again, Domicom for the way in which they're trying to change the marketplace in which they're doing things. Every year we see Domicom come up as an innovator. Self-Wealth 2, relatively new entrant into this area, but they're doing a great job. They're doing interesting things. And of course, Wiser, and the winner is Wiser. Great job this year in terms of the way in which they've structured the product and the way in which they've brought it to market. They're firmly on the radar now, and I think will be for some time. So that innovation part is really important. Thank you for taking the time to listen to me. I'm going to hand back to the other people now. So with that, thank you. And I'd love to speak to you all if I get the chance. And I hope that COVID isn't treating you too poorly. Thank you very much.
So that concludes the 2021 SMSF Service Providers Awards. Congratulations to all of the winners, an outstanding performance, and no doubt you will continue to service the sector with the highest levels of excellence into the future. Just a couple of quick housekeeping issues before we go. If you're a winner and you have any queries about receiving your trophies, please contact David Robertson from Benchmark Media. His details are on the screen now. And if you have any queries, if you are a finalist or a winner about using the logos associated with these awards, please contact Sharona from CoreData. Her contact details are on screen now. Finally, if you're not a subscriber to either Self-Managed Super or SMS Trustee News, we encourage you and your clients to do so. And the subscription details are on screen now. I'd just like to finish up by thanking a few crucial parties to today's event. First of all, thank you very much to CoreData for putting together the research and putting the surveys out into the field and collating all of the responses. An outstanding effort as always, and most appreciated from our end. Thank you also to Trobe Fnancial for their continued support and sponsorship of this event. And last but not least, thank you very much to my own event staff. They've done an outstanding job in putting this event together. Again, you may not realise, but sometimes putting these virtual events is actually more difficult than putting together a face-to-face function. So thank you again to Cynthia O'Young and Jenny David for their tireless efforts behind the scene. Thank you for your attendance, and we look forward to hopefully seeing you face-to-face in 2022 for the SMSF Service Providers Awards.